A single narrow waterway, closed for 7 days. And suddenly, the world starts paying more for everything. Fuel, food, shipping, insurance. That's the domino effect. The Strait of Hormuz. This narrow passage, which looks like a thin line on the map, is sometimes the only gateway that controls the pulse of the world. This is the Arabian Peninsula. On one side of the peninsula, the Arabian Sea connects to the Mediterranean Sea via the Red Sea, which stretches between the peninsula and the African continent and joins the Mediterranean through the Suez Canal. On the other side of the peninsula, the Arabian Sea flows into the Gulf of Oman, which is connected to the Persian Gulf. Between these two gulfs lies a very narrow waterway, the Strait of Hormuz. The strait is surrounded on both sides by the countries of Iran, Oman, and the United Arab Emirates. The Strait of Hormuz facilitates the transport of large quantities of oil every day by some of the world's largest ships. Now I ask you this question. What would happen if Hormuz were locked down or closed for 7 days? This is not a science fiction scenario, because as reported by Reuters on February 3, 2026, armed boats under Iranian command had approached a U.S.-flagged tanker in Hormuz and ordered it to stop. However, the tanker did not stop and continued on its way, escorted by a U.S. Navy warship. So when we talk about tension in the strait, we're not referring to a phrase circulating on social media. We're talking about real tension in the narrow corridor of Hormuz. And it's not just a bluff. This is where the intriguing part begins. Even before the strait is actually closed, markets sometimes behave as if it were closed. Because in the modern world, it's not enough to extract oil. It must also be insured, financed, transported, and risk-rated. This is the most crucial link in the chain, the risk premium. When tensions rise in a region, it's not the ship's captain who asks, "How much do I want for this route?" It's the analyst at the insurance desk. Then the ship owner says, "I won't go at that price." After that, companies, buyers, and refineries start looking for alternative routes. And this domino effect does not wait for oil to be physically cut off. It raises costs even at the probability stage. We saw an example of this recently in the Red Sea corridor. Reuters reported that in July 2025, after the attacks, war risk premiums for Red Sea crossings rose sharply in a short period of time, with some insurers suspending coverage for certain voyages. So what you call the strait is not just a geographical issue. It's a secret weapon for setting prices. If you can use it, that is. Now let's go back. If traffic in Hormuz is closed for 7 days, what happens in the first 24 hours? On the first day, oil charts appear on screens, but the real action begins behind the scenes. Tanker delivery dates are disrupted, deliveries are delayed. Some buyers start to mention the term force majeure, and hedge costs in derivatives markets increase. On the second day, refineries turn to their days of supply calculations. Because for a refinery, it's not just about the availability of crude oil, but its timely availability. The Strait Passage is still closed as we head into day 3. On the third day, import companies discuss alternative suppliers, but the word alternative is romantic, while the logistical reality is harsh. If the alternative is far away, freight costs increase. If freight costs increase, costs increase. If costs increase, we start talking about inflation. On the fourth day, even if there is no shortage on supermarket shelves yet, expectation inflation kicks in. Some businesses update their price tags in advance. People queue up to stock up because everyone knows the chain will break somewhere. On the fifth day, governments step in. Talk of strategic reserves, diplomatic phone calls, naval footage, And even this footage is staged to calm the market's nerves. Because in these crises, it's not just supply that drives up prices, it's the pricing of fear. On the sixth day, the entire world announces that it will take action to activate this strait. Some countries also state that they are prepared to assume the status of guarantor states in this matter. On the seventh day, if it still hasn't opened, it's no longer just about economics. It becomes a geopolitical chess game, and every move in chess translates into a number reflected at the pump. Now the deterrent power comes into play. That's why some analyses don't read the Hormuz risk as just oil. There is also a political backdrop to this story. Every tension in Hormuz often runs parallel to the diplomatic table. On one side, negotiations. On the other, events such as border tests and military exercises at sea. The most striking aspect is this. Although Iran has occasionally voiced the threat to close it loudly, the decision-making mechanisms in Iran are well aware of how frightening such a decision would be. Al Jazeera addressed the question, could Iran really close the Strait of Hormuz in June 2025, examining the decision-making processes and potential outcomes. So the mere possibility of closure is a weapon in itself. But the economy could be shaken even before the trigger is pulled. Or we don't know what will happen to the owner of the weapon when it is deployed. And now the final question. How will this affect our lives? It's very simple. If oil prices rise, energy costs increase. If energy costs increase, transportation costs increase. If transportation becomes more expensive, food and consumer goods become more expensive. Companies pass on costs to prices. Inflation expectations rise. Central banks speak more sharply. Financing becomes more expensive. Growth slows down. So a week in Hormuz can tell the story of a year in another corner of the world. Remember, sometimes to understand a country's economy, you look at the map, not the stock market. Because money flows most through the narrow corridors of fear. And that's exactly what we'll be doing on this channel. We'll be deciphering the invisible routes of money, power, and control one by one. Subscribe, sit back, and relax. Because in the next episode, we'll be exploring other key gateways of world trade with the question, which is more dangerous, Suez or Bab el-Mandeb?